Do you dream about owning your own home, but every time you think about it, you tell yourself, my credit isn't good enough, I don't have enough money saved, I probably won't qualify anyway? If you ever had one of those thoughts, I want you to stay with me because I have some really good news. Many homeowners were once exactly where you are today. The difference wasn't that they were lucky. The difference was they prepared. Today, I'm going to show you how. We'll talk about credit scores, down payments, loan options, down payment assistance, what lenders are really looking for, and the steps you can start taking today, even if buying a home is still a year or 2 years away. By the end of this video, you'll have a roadmap that can help you move closer to becoming a homeowner. Let's go. If this is your first time here and you want to learn everything about buying a home, living in Orlando, moving to Orlando, and relocating to Central Florida, make sure you subscribe because every week we talk about real estate, homeownership, and building our future with confidence. If we met before, bienvenido, welcome back. Now, let's start with something that scares almost everyone. Credit score. Why does a lender check my credit? I hear this all the time. Think about it in this way. The lender doesn't know you. You've never met. Yet they're about to lend you hundreds of thousands of dollars. That's a huge responsibility. So naturally, they want to know, based on this person's financial history, what are the chances they will pay me back the loan? One of the biggest tools they use to answer that question is your credit score. Let's dig deeper. Your credit score generally ranges from 300 to 850. The higher the score, the better. If you never borrowed money before, you may have very little or even no established credit history. Generally speaking, 650 or higher is considered good. 750 or higher, great job. But here is something I really want you to remember. A lower score today doesn't mean you can't become a homeowner tomorrow. Credit can improve. The biggest factor is simply paying your bills on time. Credit cards, car loans, student loans, mortgage payments. The lender wants to see, can this person consistently make payments? Sometimes we miss a payment not because we didn't have the money, but because life gets busy. Believe me, I've done it too. One thing that has helped me is setting automatic payments or putting reminders in my calendar. Little habits can make a huge difference. Another important factor is how much of your available credit you're using. For example, if your credit card limit is $2,000, just because you can spend all $2,000 doesn't mean you should. Personally, I like keeping the balance much lower whenever possible. My rule is less than 10%. I'm not a financial advisor, so I always recommend speaking with a qualified financial person for advice specific to your situation. Lenders also look at how long you've been using credit. I remember encouraging my daughter to open her first credit card when she turned 18. Not so she could spend money, but so she could begin building responsible credit. Don't worry, we had a long conversation. One thing that surprises many people is that closing an older credit account can sometimes lower your score because it shortens your credit history. I know, it doesn't always make sense. Lenders also like seeing that you can responsibly manage different types of credit. Maybe a credit card, a car loan, a student loan. It shows experience managing financial responsibilities. But don't run out and open 5 new accounts. A couple over time is very different from opening several at once. Now, what if your credit score isn't where you want it to be? Please don't give up. I've seen people improve their credit simply by making a few changes and giving themselves a little time. I also have a few simple tips that may help improve your credit score. And I work with trusted professionals who specialize helping people understand and improve their credit. Please reach out to me. You don't have to figure everything out by yourself. The important thing is don't let today's credit score convince you that home ownership is impossible tomorrow. Sometimes all you need is that right plan and the right people walking beside you. Now, let's talk about another topic that makes almost everyone nervous: the down payment. And I have more good news for you. One of the questions I hear almost every week is, Rachel, how much money do I actually need? The answer is, it depends. There isn't just one loan program. And no, you do not automatically need 20% down. Hopefully, everybody just took a deep breath. FHA loan is backed by Federal Housing Administration. Many buyers qualify with only 3.5% down. It also tends to be more flexible with credit requirements than many conventional loans if your credit isn't where you like to be. Personally, I still encourage you to work on improving it if you have time, because a strong score can open the doors to even more and better financial options. Conventional loans can also require as little as 3% down for qualified buyers. One major advantage: if you put 20% down, you can actually eliminate private mortgage insurance, also known as PMI. One of my favorite programs is the USDA loan. Why? Because eligible buyers may qualify for 100% financing. That means no down payment. Is designated for many eligible rural and suburban areas. There are income and location requirements, but if you qualify, it's definitely worth exploring. If you've served our country, thank you. VA loans are one of the best loan programs available. Eligible veterans, active duty service members, and some surviving spouses may qualify. Benefits often include no down payment, no PMI, competitive interest rates. Personally, I love seeing our military families taking advantage of benefits they've earned. Very well deserved. There are also physicians loan programs. Depending on the situation, it is designated for medical professionals. They may allow little or no down payment, no PMI, and sometimes greater flexibility with debt to income ratios. Now comes one of my favorite topics: down payment assistance. There are so many amazing programs designated to help buyers. Some are forgivable, some only have to be repaid if you refinance or sell within a certain period. Others are completely forgiven after a number of years. When I tell you there are a lot of programs, I'm really not kidding. Many families are becoming homeowners because they took advantage of these opportunities. So why not you? I'm actually going to dedicate an entire future video 2 down payment assistance because there is so much to cover. Beside the down payment, you also hear about closing costs. Generally, they can range around 2% to 5% of the purchase price. Although every situation is different. The good news, some down payment assistance programs can help with closing costs as well. Your lender will provide a loan estimate that clearly breaks everything down before you move forward. No surprises. If you stay with me until the end, I want to congratulate you. That tells me you are serious about becoming a homeowner. And if there is one thing I hope you take away from this video is this. Don't let where you are today determine where you're going to be a year from now. With discipline, a plan, and the right people beside you, your dream of becoming a homeowner may be closer than what you think. Home ownership isn't built in a day. It's built one good decision at a time. Believe in yourself. Whether you're planning to buy in 6 months, next year, or even a few years from now, my team and I are here for you. You have questions, we have answers. We combine our resources, experience, and genuine care to make your move to Orlando and Central Florida as smooth and stress-free as possible. And if you like help creating your own plan towards home ownership, simply comment home below or reach out using the contact information in the description below. I love the opportunity to help you. Thank you so much for watching. Have a blessed day, and I will see you in the next video.